Hello everybody and welcome back. Well, today we have a special episode because we'll be talking about everything to do with the stock, commodity and crypto markets right now. And while we're seeing the stock market moving up in terms of the SP 500 and Nasdaq, we are seeing what we call demand destruction occurring in commodities around the world. There's so many things that are under the hood of these markets that are starting to make us think that maybe the bigger players are coming in for a potential ramp up. You know what that also means? Maybe we finally fill some of the gaps we've been looking at on the left-hand side. So much to discuss. See you soon, guys. This will be a good one. Well, hello everyone and welcome back to the video. We'll be talking about stocks, commodities and cryptos today, guys. And we'll also be talking about liquidation because this is something that's been happening to retail community traders, especially in the last subsequent weeks. We can actually see it in the hard data, and I'll be showing how this could lead to a little bit of a pickup in these markets. We've got so much data, but first, I just wanted to mention that today's video is sponsored by Tiger Brokers. If you're interested in any of their special promotions, check out the link description down below and more of them later. Let's talk about the actual market for what happened during the session. Straight away, as we've been suspecting, as we've been talking about recently, the Nasdaq was where the money was piling in. We saw a little bit of a ramp early, followed by some sell-off throughout the day to push the markets down as much as 0.5%, and then a nice ramp into the close. When Wall Street's buying the close, of course, that makes us happy as an investor and as a trader out there because it shows that they're committed to the trade. What's different though about this rally is it's not the usual subjects coming in with the buys. It is certainly not commodities. XLE down here 3.7, that's gas and oil, obviously looking bad. Metals looking bad and gold looking bad. Could this be the first cases of demand destruction? We've been seeing this now for 2 weeks in the markets as gold, metals, everything else technically is selling off while the rest of the market is starting to rotate and build positions in the technology side. Most of the biggest performers were a mixture of staples, but a mixture of really high end. And whenever you see PBW and TAN, which are solar and clean energy, it usually signifies that rotation. Let's talk about retail investors. Yeah, it's not been good for retail investors, and there are certain things that tend to occur with lows where retail investors get scared and they stop buying. Warren Buffett obviously has the quote that everyone's sick of hearing, which is about fear and greed. You all know it by now. But what happens is we usually see retail investors get less sure about buying something. Notice the current trend. Here is retail daily net inflows into US equities, and then we notice the trend of the market. So what happens is everybody buys the dip, yeah? And they keep buying the dip at some point, and then the market often will scare them a little bit, forcing everybody to not buy the dip anymore, and then the real rally occurs. In this point here, what happens? Liquidation, or at least fear in the position. Similar things happened when the market got down to a level which we also talked about, where we saw that rally up. The first time a lot of people wanted it, it took out everyone here, took out the stop losses. Obviously, less people got sure of themselves and the market rallied, then with a secondary fall much later on. So this is what occurs all the time. Where are we right now? Well, net inflows are very low and we're at a low or bottom of markets that most people thought we couldn't get to, which of course is interesting. Here's another one, warning sign here. Korean retail traders are facing rising forced liquidation pressures. So this is the percentage of forced selling within short-term margin trading accounts. Again, a very high statistic here, not seen for a little while now. Even during the 2020 and 2018 kind of falls, we haven't seen liquidation like this. So what happens when Wall Street liquidates people? Again, we see that short squeeze potentially play through. And we are seeing this manifest in price, which is the most important thing, because data is great, but can we actually see it manifest in price? It's something we try to break down here on the channel. Small options traders are sitting on 600 million plus in losses. So again, another forced liquidation there. A lot of small options traders had a lot of gains here. All of those gains have now been wiped off, and it's deep red, unfortunately, for a lot of people. And this is, again, why the big guys have such an easy time at taking money from us, the retail herd. We really need to follow the big ones and the big players as much as we can. How can we do that? Well, one of the ways is a chart that we brought up in the previous video. And that was really talking about institutional asset manager inflows and outflows. They've been actually dropping flows for a while. And we've talked of this figure before, but now it's at points where it's critically low. This is a time, generally speaking, where inflows come back into the markets as even the market big managers are probably going to start turning and shifting. Again, we want to see it manifest in price. It's just data at this point. What are some other data points that we've got here? Well, back-to-back weekly declines of 5% tend to be run up for the next at least month with some gains. What do they call this? A dead cat bounce. Does it mean that we're out of all of the problems yet? Absolutely not. But it certainly does show some of the flows and some of the changes going on in the market. So from a pure data perspective, it makes sense what we're seeing right now, which is this potential rally that's coming through. And we'll look at the key levels in the market in just a few moments. So I thought this might be a good time to just quickly talk about the sponsor of today's video, which is Tiger Brokers. Let's have a look at some of the ways that we can use the platform to help us as traders. One of the big ones is their premium news feeds. They subscribe to Dow Jones, Reuters, Benzinga, and Redbox, and you can get a whole bunch of information you can see here coming through from these platforms where you'll notice all of this being shared. They also have an in-app community of millions of investors where they share their insights with peers and different news articles. And as you guys know, I particularly like the market flow, which I've been talking about a few times. So some of these things can help us make better decisions in the markets. And thank you for them for sponsoring today's video. And of course, click on the link description down below to see some of the bonus offers they have if you're interested in getting their platform. Let's move over here to the JP10Y. We're on JP10Y watch here on the channel because of course we know that they are trying to peg back inflation. They are saying no inflation. We're going to use trillions of yen to try to stop it. And that's putting, of course, downward pressure on their currency. So it's one of those ones that's being manipulated. I personally like to stay away from these positions, but of course it's interesting also to watch because if they break, then it's kind of like they've doubled down on something that's very bad, and that ends up having dramatic ramifications through the whole financial system. For anyone that doesn't know, 0.25 is what they want to keep it at, and it's kind of slowed here since we first reported on it. So continue to watch it. If it starts spiking, we'll be there talking about this and whether the Japanese bank or central bank is about to lose the battle with the market. We'll find out whether they do so. Good news for them, inflation is partially coming down in the US, which we can start to see manifest in 2-year and 10-year rates. You have to watch these during 2022. Whether you're a scalper, day trader, or investor, these are important. We did see it drop in the last session, but then it's picked back up. So let's have a look here at the 1 hour. The 1 hour dropped pretty significantly for a lot of the session and then kind of picked up. It went down underneath 2.9. So at this stage, it looks like it's changed the trend, which we were talking about here, and of course here. And everything so far is coming true, which is that we're seeing that topping of the 2-year and we're seeing the topping of the 10-year potentially in this market. The easiest way to see this is demand destruction, and we'll take a look at that in just a few moments. But it's important that we also go through the dollar index, which we know is all different currencies kind of floating around thanks to the yen, thanks to the safe haven. But at this stage, still looking a little bit negative here on DXY, which could mean money's going into things like markets and bonds as well. And that's manifesting also in gold, which is subsequently just holding its own as best it can. We've got the defended zone down here, and we've got the resistance up here, and everything, unfortunately, in this bit, other than where I've got this big line here, 1846, it's not clear that we're going to have buyers or sellers. At the moment, it's defending here, but I could see easily gold getting into this price, potentially turning around in our defended zone and moving towards the long. For most buyers looking for confirmation, they'll want it above this price. And we tested it in the previous session again, 1846, but could not get through. So there's a lot of fighting, a lot of manipulation going on in gold at the moment. So we mentioned demand destruction. Let's take a look at that in the charts. So one of the best trades this week, at least in my opinion, has been oil, specifically US oil. We had a monstrous distribution chart. Fantastic. We have that. If you want to go back and watch our live stream at Monday or at the Tuesday before the open, we were talking about this exact price. Little false breakout. We even talked about that. New low, bang. Big trade there. And now at this stage, it seems to be kind of forming a little bit of a potential pennant. So what a pennant is we've got kind of a series of higher lows, and we also have a series of movements down. So we're kind of locking price in here and possibly looking at even further destruction of the price. So continue to watch oil. It's going to be important for the inflation story moving ahead to the next, of course, inflation numbers. XLE's been suffering from this reason. Notice here on the stock market, all of a sudden the hot was not, and they have sold relentlessly and ruthlessly over the last 2 weeks into this, where oil has basically become the new piñata bashing of the market. They really disliked it. Where are we though? First level demand. So this is the point where you could see turnarounds a little bit here, maybe a little bit of a pickup in the oil market. Still very weak. You're trying to catch the falling knife, but this is technically good for things like growth. And it's good for inflation. What it's not good for is anyone that's in these particular types of inflation-based stocks. They've suddenly become not hot. Next level, if it does fall through, you're looking at the 200 daily SMA, which it has bought off before. So somewhere around here, you'd probably be looking for some pickup, maybe a little bit of reprieve in the selling, which has been ruthless in energy stocks. Another one that's been falling a lot is agriculture or agribusiness stocks. These are falling through. Again, demand destruction shows us that inflation is probably dropping on the top. I would say that the market is telling us that we've seen the peak at this stage. That doesn't mean we've seen the peak forever. You could disagree with me totally, but this is demand destruction, which we've suspected is coming for now around a month. And it's theoretically a good thing for probably more the growth stocks in the market. And that's why we're seeing certain turnarounds occur. Speaking of growth, we use XLY, XLP as a kind of combo to show us whether the market is risk on or risk off. At this stage, still hovering and holding up. That's consumer discretionary versus staples. A stagnant day here, but still holding very well. The rotation is still in play, which we saw when we looked at that platform just before as well, the Tiger Brokers platform. IWM, Russell 2000, little bit of bullishness in the last session, up 1.2%, still quite weak. Mostly because, remember, IWM has a lot of financials in it. Financials not doing so well right now. It's basically the trifecta: financials, metals, and energy, and also agriculture. All the things that have done well are right back down. Fertilizer stocks have taken off everything that they put on after the Russia-Ukraine stuff occurred, and now they're back to those key levels at this stage. It's just so fast how everything just clicks and moves around. The DAX, slight recovery here in the session, showing a slightly more broad-based buying going on in the street. Effectively, the DAX does suffer from having a lot of older school businesses, financials, energy, metals. It's not the sector to be in right now, so therefore it's not really the strongest kind of market. But take a look at this. We've actually got the movement here as of the time of recording through the previous supply or resistance line. You can just see it in the chart. The Nasdaq is much stronger than any of the other markets at this stage, and it will make sense when we think about where the stocks are at in comparison to the S&P 500. Here's the big turnaround. At this stage, we have a left shoulder, head, right shoulder. We're kind of breaking through, though that is not the real market, so it's important to see the real market break through. And I would certainly suggest consider subscribing to the channel, because we'll have a big video coming out this weekend talking about what these big institutions are doing. And I think it's not to be missed, even if I do say so myself, because we should have some great information in there to help you guys out with maybe, kind of figuring out what Wall Street's really up to in this situation. This is a big move, huge turnaround, and obviously something we'll be watching throughout the next session. Can it actually hold up, or is this all part of a false break where it moves down? Look to things like a trend line behind here, and look a lot to the Friday close. It's going to be super important. Let's talk about the S&P 500 now, because a lot of people are saying, well, the market should come down here at least, or if not down here, over the long term. Well, you've got to remember, in all bear markets, markets recover, bust, etc. What we have left on this stock market is quite a few gaps. So we still have two mega gaps, which are unusual to leave sitting here and here. We've spoken about those now for what seems like eons, but it hasn't actually been that long. It's only been a week and a bit. These gaps should, or at least could be filled over this next coming week if we see the right signs through the Friday session. So that's something to look out for. Volume has also been high thanks to the quadruple witching, the extreme amount of margin there. But I want to put in perspective one thing that I think is interesting. You'll notice these 3 boxes down here and you'll be like, Tom, what the hell are those? Well, these boxes represent price of some of the stocks right now. And I've just picked 3 stocks. Amazon. So if we think about where Amazon is at a price at the moment that is equal with its 2018 highs. So that is a huge destruction in a business. Now we know why, there's obviously valid reasons, but that's where it is in comparison to the SPY. You would have never thought that is even possible when you consider where the SPY is and where Amazon is. But this is the thing about markets. They do the impossible, or at least we don't understand necessarily how they get there in those periods. Now we do. Netflix down at 2017 prices. Again, we understand the business is suffering, but it's been sold heavily. And then the last one, the fabled ARK down obviously to its lows of the 2020 lows here. So significant selling that's occurred in really across the board technology. That's nothing new to us. But to put it in perspective, that's why we're seeing some of that rotation occurring in the markets. Another easy way to put it is to look at the QQQ versus the SPY, a chart we've brought up many times. And part of the reason this rotation could be occurring as well is due to this chart. We can see here that the real ratio here is kind of on its little point. And if we go down to something like a 1 hour chart, which seems to be just refreshing here, it should show us really close to breaking out as a ratio where QQQ should outperform the S&P 500 moving forward, at least if we continue to rally. And that's a big caveat, at least if we continue to rally. Let's talk about the US 500 now. And that's also coming in on that previous FOMC day. We did kind of think that this might have been a turnaround story. It didn't hold, at least even for a second. It just fell straight after that. But this is a big point. This is where a lot of orders will be sitting in the markets, and a breach of that should be covered by some kind of pullback in the next week. We'll have the video talking about it. And if that occurs, then of course we look towards ideally a bit of a run up to fill the gaps. But what do you guys think in the comments down below? Do you feel like this market is strong right now, or is this all just big trap that's about to short through the Friday session? I think it's a pivotal one for sure. And bears will be out in the morning trying to find reasons to short this. Absolutely, I don't blame them. It's right around the zone you'd be looking for. And bulls will be hoping that it runs through and then they can buy the pullbacks. At this stage, it's a series of higher lows and higher peaks, which as we know is significant because that means that the trend is still intact towards the bull side on the smaller time frames. If we go and have a look at max pain, that would probably prove that we are potentially moving down for the Friday. Do not control your trades by max pain. Max pain just shows you a bit of an idea where if the options market was going to fully expire perfectly for Wall Street to make the most amount of money, they would expire it at this stage with the amount of options that are open at 376 on the SPY. You'll notice that there are a lot of 370 puts, heaps of puts underneath that were entered that are now going to expire, most likely worthless. And then we have the 380 level being the biggest call wall. So somewhere inside here is where you would usually expect it to expire, but max pain just helps us sometimes to justify a move or to figure out whether we want to be in a market or not. Bitcoin also recovering 21,300. Nothing new here really for us. We know that it will move with the SPY and the Nasdaq to a degree. If risk is on, Bitcoin will come along for the ride. And it's good to see it, slightly recovering. We do have that high here with this wick candle. A breach of that probably pushes this into 23 to 24,000, if not 23.5. And we'll be talking more about this level on the weekend because while the rest of the market's closed, the weekend Bitcoin will still be alive. And this is where there'll be a lot of infighting between bulls and bears. And if we get through there, we could see rallies up to 28,000 quite easily. It's now above production cost. You'll notice here the raw energy cost to create a Bitcoin. It's now slightly above that price. So you're actually a miner. If you think about it, if you're buying Bitcoin at the moment, because you're getting it cheaper than they do and you don't even have to buy the machine. But of course, we don't always invest based on those concepts. But yeah, Bitcoin right around that level, which makes sense of why we may see some buyers. If you haven't already, come and follow us in our Discord community. We have both a public Discord community with tons of great shares. A lot of the charts have actually come from today's video from that community and your shares, the memes as well, which is cool. And then we have a private community as well where we do extra streams for the opens. If you're ever interested in that, free 7-day free trial in the link description below. And yeah, of course, follow us over on Twitter. News for the week, nothing much extra, so I won't even bring it up. But it's going to be an interesting few weeks moving forward. I hope you guys are doing all right out there. And of course, if you haven't already, consider subscribing, smash the like button, and you have a great weekend, a great Friday. See you later.